Hey, you've heard about that whole deal about buy term, invest the difference, and eventually you'll just be self-insured? Yeah, don't do that. Hello and welcome to the Durham Talents channel. My name is Jesse Durham. We're back for another installation in our Myths, Mysteries, and Misconceptions playlist. And today we're going to be covering the topic of self-insured. So let's just look at insurance for a second here. And, well, let me jump to the chase. Here we talk about owning properly structured whole life policies with mutual companies that pay dividends, okay? So that you can use that as the optimal entity for becoming your own banker, okay? So system of policies for the banking purpose. Yep, there you go. But let's talk about insurance in general real quick, okay? So big picture view on this idea of becoming self-insured, because again, the whole line is buy term insurance, so insurance on your life. Invest the difference that you otherwise would have paid to something like whole life insurance. That's a really neat subject. Maybe we'll do something there here real soon, because what is that difference? How do you arrive at that number of the difference? So interesting thought. And then eventually you'll be able to be self-insured because you'll have this big, massive net worth, hopefully, a big pool of money that, hopefully you can access. Hopefully it's not, split in half. Half of it disappeared from some market downturn, or, who knows what taxes are going to look like in the future, 30, 20, 40 years from now. I don't know. You don't know. Nobody knows. Inflation. There's so many things to consider, right? But again, that's the deal. So let's jump back at the beginning. Life insurance. Buy term, invest the difference, and ultimately you'll be able to be self-insured. So let's talk about that term insurance just for a second. Because in life, we do insure lots of things, right? We might have even phone insurance, but sure, things like car insurance, things like homeowners insurance. So we're used to insuring things where some catastrophic loss would just be that. It would be a catastrophic loss. Well, here, what I'm trying to draw attention to is this is our only shot at this life right here. This is it. What's that famous saying about, this is not a rehearsal. Okay. So this is it. Now, I do believe there's a life after this one. If you'd like to talk about that, that'd be a great conversation to have. But we're talking about having life insurance. So if this is the only one we have, it's just my inclination to believe that it's always worth insuring. It's the only one I've got. This is the only life I've got. Why wouldn't I insure it for my whole experience of it? Is there a window? So here's a difference, right? Is you're talking about phone insurance. Do you always have to have phone insurance? Probably not. Do you even always have to have home owners insurance? No, not necessarily. If you have such capital and such access to it that it wouldn't be recognizable hardly, virtually for you to replace the home that you're in. Do you have to have homeowners insurance? Probably not, I don't guess. Would it still be prudent? Yeah, probably so, right? So again, I'm not telling you what decisions to make. I'm asking you to consider who controls the banking function in your life. Okay. And the tool that we use for that is whole life insurance. So it is an insurance that you can own for your whole life for the banking purpose. That's what we're talking about. Not just having whole life insurance just for whole life insurance. And there are 16 or so reasons why I think that properly structured whole life policies with mutual companies that pay dividends are the ideal financial asset, period. The compounding, the protection against inflation, so many different reasons. But we're talking about this self-insured idea. So I think that a life is worth protecting the whole lifetime. That's where I've arrived at. Okay, so you figure that out for yourself. How long do you want your phone insured? How long do you want your car insured? How long do you want is it prudent? Probably so. Okay, so if our life is more valuable than our phone, if our life is more valuable than one car, I mean, I'm not even in my first car. Are you still in your first car? Some of you might be, right? But many of you won't be. Are you in your last car? No. Okay. So if our life is more valuable than our cars and stuff, why wouldn't we insure it for our whole lifetime? All right, so let's set that thought aside now for a second. A big part of this equation, of course, after buying term, just to get a lower cost. Okay, we've covered that on this playlist and on this channel for a long time. But the second part of that equation, the second variable, is invest the difference. Okay, I do think it's worthwhile asking, okay, in this part of the equation, what are the guarantees? If you're talking about a 401k, one guarantee would be that it won't go below zero. But how exciting is that? Yeah, right. Not so very exciting. And that's hard to even say out loud, because I know that, some of our clients and definitely, people that are still just vetting this idea and hearing this, I mean, like you've got pain over, what you've experienced in those types of products. So I get it. But this idea of investing the difference is out there. And then you're just supposed to presume that over 20, 30, 40 years of locking your money up, not being able to have free access to it, and it's on this roller coaster ride, and you got the people along the way that say, well, don't jump off the roller coaster, that's the only time you get hurt, it's only a paper lock. But what access do you have? What control do you have? What guarantees are there? Okay, what risk are you assuming? So I'm just saying, but you're supposed to presume that after 20, 30, 40 years, whatever the case may be, that you're going to have enough money to be self-insured. Again, I've already pointed out, you've only got one life. Can you, I'll tell you my answer is already no. Can you have so much money that you think your life, could be exchanged for that? I mean, I can't have enough death benefit. I can't have enough death benefit. So far we own 6 policies. We've been doing this for, we're in our 9th year now. We're systematically buying properly structured whole life policies with mutual companies that pay dividends. So we're buying those whole life policies, that people blast, and with purpose and intent, and happy. Ask me how many times I've had to check the market to see whether I lost money from paying premiums into these policies that I own and control. 0. You know what that growth trend looks like? Up. In a word, up. Greater cash values today than I had yesterday, greater this year than last year, just more and more efficient. And how many of those do I want? As many as I can have. How much death benefit do I want to have? I can't have enough death benefit. And there's no amount of death benefit that's going to be so great for me that I'm going to be okay, self-insuring at this point. Not happening. So buy term, invest the difference, and eventually you'll be self-insured. And Dave Ramsey, for example, he's really good about pointing out some things that, folks should consider, like what medical costs might do to your net worth, to your wealth later on, what some type of assisted living situation, so things that we should consider, things that we should, talk about. But the idea that you could get to a point where you are self-insured, again, if you had the money to replace your whole home, something tragic happened, you had to replace your whole home. If you've got the capital to be able to replace where you live, that's great. But let me ask you, which is, more expensive, to have all that capital set aside in the event that takes place, or a premium for home insurance, which is less expensive? And I understand, it's insurance for a reason, and it's priced for a reason. And these companies, they've got to be profitable. I want my companies to be profitable, but I'm saying it's prudent to have that home insurance for a reason. So the idea that you would do that with a home, that you would do that with a car, that you would do that with a phone. Some of you would freak out if you ever thought that you didn't have, insurance on your mobile device, your telephone. But will balk at whole life insurance? That doesn't make sense to me. And if this conversation is piquing your interest, or some of these things are starting to make sense for you and you're vetting this idea still of becoming your own banker, I'm going to encourage you to contact us on our website, www.durhamtalents.com. There, you can watch our free presentation. We've got an introductory presentation for free where you can watch what I learned back in 2015 about how to become my own banker. You can watch it for free. We put that out there for free. And you can contact me. You can get in my calendar so we can talk about your questions, your particular financial situation, and what it could look like for you to implement this concept of becoming your own banker. So you can book that call right there on the website as well. So I hope that this has been helpful. I look forward to our next conversation, and I hope you have a great day. Take care.
Yeah, so you've heard about that whole buy term, invest the difference, and you eventually be self-insured bit? Yeah, don't do that.
I like it. Let's go.